Indians love physical gold. There are a lot of customers, whatever small savings that they have with them, they go and invest it in gold. Gold works beautifully against inflation, but if there is somebody who has an end goal, then physical gold or digital gold is a better investment.
Sachin Kothari is a director at Augmont Gold For All, India's #1 gold ecosystem right from refining to retail services. Today he joins us to discuss the future of gold investments and how gold is evolving from traditional jewellery to a modern asset.
Today, a 100-gram bar would buy you a car. 100-gram bar would have bought you a car even 30 years back. Gold loan is a better option because there was this guy who was a fruit vendor. He used to wear a gold chain. He used to pledge that gold chain, take money from the NBFC, use that money to do his fruits business, and then at the end of the month.
Where do you see gold investments headed in the next decade?
So,
right from the richest household to perhaps the not so richest, that one item that you will find in every household in India is gold, in jewelry form or in any other form. Now that's on the consumable side of it. It doubled up as an investment too, of course. But when we explore only the investment part of it, today there are a variety of options. So could you share how an Indian investor can invest in gold today?
So, see, Indians have a very true affinity towards gold. They love investing in gold. And this has happened over the period of years where culturally, Indians are known to invest their money in gold. Today, fortunately, there are various other avenues that are available to invest in gold. If you were to look, there are precisely 4 to 5 options that are available. One is obviously the physical gold, where people can buy in the form of bars, coins, or jewelry. The benefit that they have is they get that physical gold in their hand. And also in jewelry, there's some sentimental value attached to that, where people want to feel it, store it, keep it close to them. But the disadvantage is obviously that there are storage issues. You have to store it in a secured vault. There are also risks of theft, and insurance also needs to be there. Which is why there are new innovations that come up in gold investment products where we cater to those risks that are attached to buying of physical gold. So digital gold is an option where people can buy in fractional quantities. They can buy for any value of gold. They can go as low as rupee 10. They can buy it in fractions. They can do SIPs around it. The way this digital gold works is when you buy that physical gold, equivalent quantity of gold is stored in a physical vault, which resides in a secured location. There are custodians who actually store this gold. You have the options of selling the gold whenever you want. The money is credited to the bank account immediately. You can also request for a physical delivery of that gold, and that gold is delivered to the customer's doorstep. In fact, you also have the option of using that digital gold, go and visit any jewelry store like let's say a CaratLane store or a Kalyan store, purchase some jewelry and use that digital gold to make payment for it. So those features are available for the customers. Now there's also an interesting concept that is coming in where you can invest your digital gold and get additional returns on it. So these are the features that are available for digital gold. Very convenient, available at the tip of your fingertips on your mobile phone. So that is one option. Then obviously then we have gold ETFs. Gold ETFs again are very highly liquid. No additional charges or making charges, anything associated with it. No GST as well. But the disadvantage is there is no physical gold. And Indians love physical gold. So it all depends on why a particular customer or an investor is buying gold. What is the end goal? And that is what determines what kind of investment the customer should do. Let's say if he wants to buy only for investment purpose, getting a return on it, but does not want a physical gold in hand, then gold ETF is also a very good product for them to invest in. Then you have the mutual funds, where there are certain mutual funds who invest only in gold. There are certain mutual funds which do a mix of equity and gold. That also provides exposure to gold, but in an indirect way. So you might have some exposure on the gold prices, but there are no direct exposure on the gold vis-a-vis what a physical gold or a digital gold provides, where you are owning a certain grammage of gold and you know what is the value that gold has. Other than that, there are also some future exchanges where you can just take an exposure on the gold prices, highly leveraged. You can buy gold for a low margin, but a risky proposition for retail customers, because you need to understand the dynamics of how a future market works, what is leveraging, what kind of investments are you doing, and what is the kind of exposure that you're getting on that investment. So these are the various other revenues that you have for gold investments.
So let's say if I am a new investor, I don't have a single gram of gold to my name, either in physical or digital. And at this point, perhaps my end goal is to serve both, perhaps saving for my consumption later or as an investment. Where would you recommend I start off? With physical, accumulate a little bit of physical, or go purely the digital route?
So first of all, highly unlikely that there will be someone in India who doesn't have any gold investments. But yes, if your end goal is consumption at a later stage, but right now only from investment perspective, digital gold offers both, where you can just invest whatever you want to invest in gold, but get a delivery at a later stage. There are convenient modes available in terms of SIPs and various other structured forms of investing in digital gold. Physical gold also, because what physical gold also offers is you have that gold investment, and at the same time you're using that gold for consumption in the form of ornaments. So you can use it maybe at the later stage, sell it back, and then get a new design or a new form of ornament that you have, and that's how it goes.
And no making charges.
Making charges are there, obviously.
No, for the digital.
For digital gold, there are no
exactly.
making charges.
So
there are no making charges. In fact, there are no AMC charges. There are no storage charges. But if you are holding digital gold beyond a certain point, there might be some incidence of storage charges.
Okay. In India, I feel that sometimes still people are a bit hesitant to go for that digital gold option, because there is this psyche that, the gold that is in your hand is really the value. How would you bust that myth of sorts that people do have against digital gold? And unfortunately, we also see incidents of cybercrime, etc., that do give anything digital a bad rep. So how would you bust those myths?
Earlier, people used to buy gold from jewelers. There was no clarity on what is the purity of gold that they are buying from the jewelers. But if you come to digital gold today, there are enough standards in place which ensure that the quality of gold that has been sold to the customers is of the right quality that was committed. Also, as a part of certain self-regulation measures that have been introduced by the digital gold industry, there are trustees and custodians in place who ensure that the customer holdings are safe in the vault. Customers will also get a bird's eye view in real-time basis on their apps, what is the grammage of gold that they're holding, where that gold has been stored. The trustees also issue a weekly certificate based on their verification of the physical gold and the records that the customer's gold is lying safe in the vault. So all those things are there in place, and we strive to create that entire trust that the customer wants a particular digital gold player to be, and that's how his gold is secured, and customers can be rest assured at any point in time that they are doing the right investments in gold.
Now, of course, gold is pricey. I mean, 80,000 odd rupees is where it's currently trading at. But then, of course, there's the concept of SIP. It was usually used in mutual funds, but now you can do an SIP in gold as well. So could you elaborate a bit on that?
So SIPs work similar to how SIPs work in the equity and mutual fund industries. The benefit that it provides to the customers is there's a disciplined way of buying gold. You keep on buying gold at a certain fixed periodic intervals and accumulate gold in smaller quantities. You might have a target of acquiring, let's say, a certain grammage of gold, but you don't have the money today. This helps you accumulate that gold in a disciplined fashion. Also, it provides you the benefit of rupee cost averaging, where you are buying gold at different prices on the ups, on the downs, and that helps you buy the gold at the right price and make your the buying price of your gold at a reasonable level. There will be times when the gold prices are shooting up, there will be times when the gold prices are going down. This will help you get your gold accumulation in a proper manner.
And there's another method that has been very commonly used in India, and that is the monthly installment way, that you go to a jeweler, you sign up for a scheme where you pay for a certain number of months, and sometimes they give you that 11th month free, or they give you some sort of incentive. So could you tell us a bit about that option that's available to especially Indian consumers?
So Indian consumers also, other than the monthly investments, Indian customers also like the daily SIPs, the weekly SIPs. In fact, there are a lot of customers who do that, where whatever small savings that they have with them, they go and invest it in gold in fractional quantities. And again, digital gold is something that offers that. Also, there are a lot of schemes that are run by jewelers where you can invest on a monthly basis a fixed amount with a jeweler, let's say for 10 months, 11 months, and 1 month installment is provided free by the jeweler. In those cases, what happens is the conversion at the end of the tenor has to happen in the form of jewelry. Now, if a customer is looking to purchase jewelry, this works for them because obviously you're getting some additional benefit from that 1 month EMI. But at the same time, one has to understand that there will be certain making charges on the jewelry that he has to bear. Now, again, depending on what the customer wants to do, if his end goal is to buy jewelry, this works for them. But if his end goal is to invest in gold, there are other EMI schemes also that are available where you can fix a price on day one and then make the payment in parts over a period of, let's say, 3, 6, or 9 months and then take the delivery. What happens in the current scenario where this product can work beautifully is, let's say you want to buy gold at a price point of, let's say, 70,000, but you don't have the money for the entire purchase. And if you keep on buying in parts under SIP, you will end up buying at, let's say, 70,000, 72,000, 75,000, 80,000. But in this case, you can book your price at 70,000, make the payment over a period of a year, but your gold will still be booked at 70,000. And even when the price go 80,000 and you don't have the money, you still end up getting the gold at a lower price. So those schemes are also available in the market. In fact, we at our end also run something like this through a lot of our channel partners where customers can buy lightweight jewelry and gold coins in a similar fashion.
Okay. Now, when it comes to SIPs in, let's say, a gold fund or a gold ETF, etc., it's regulated by SEBI, and it's the AMC house, of course, is well regulated. But when it comes to the other kind of gold EMI, that's run very often by gold jewelry stores, like you mentioned. Especially in such cases, what should investors be wary of? What are the factors they should consider before opting for such schemes?
The investors should definitely look at the quality of jeweler that they're working at, what is the kind of trust and recognition that they command in the market. Also, when you are investing, it is always better to be prudent and not go out just chasing returns. If, let's say, there are jewelers who are offering a very high rate of return on such kind of schemes, then the investors should understand that all is not hunky and dory there. So obviously the investors have to look at what are the gold prices, at what price points are those being made available to the customers, which are the institutions which are offering it, what is my end goal there, be selective of where they want to put their money, where they want to put their trust on. There are enough players in the market. Even though certain products like, let's say, a digital gold is not regulated by the authority, one has to look at the structure of the product and how there are self-regulation measures in place to ensure that their interests are taken care of. So those are the things that customers have to evaluate and make sure that they don't lose the money on some scheme that is just introduced in the market and takes away their money.
Yeah, like a Ponzi scheme kind of thing.
Yeah. And there have been instances in the past where certain jewelers have done it. But I would say that just because certain jewelers have done it, you cannot mask the entire industry in that fashion. There are enough jewelers who are doing this in a very systematic way, in a very professional way, and it all ends up at the customer's point where they have to decide what they want to do.
I just have a question from an investment portfolio point of view. Like equities, debt, even gold is a part of an investment portfolio.
Yeah.
But here the question is that would the gold jewelry that may have been purchased by me or bestowed by my parents, grandparents, etc., would that also form a part of the portfolio?
See, when you look at your family wealth or your family assets and investments, there are two ways to look at it. There are a few people who think that ornaments are not a part of asset. So they are for use for consumption purpose, they're not assets. And then they feel that only bars and coins are assets and not the ornaments. But one also has to consider that even though it is in the form of ornament, it has an economic value. It is not like your phone or an electronic where the value is depreciating. The value of the ornaments are also appreciating. Obviously, there are certain making charges that don't appreciate, but there is a value to that ornament. Gold works beautifully against inflation. It's a safe bet against inflation. It has an inbuilt natural hedge against inflation. So to put it differently, let's say today, I would put it this way, that a 100-gram bar would buy you a car today. A 100-gram bar would have bought you a car even 30 years back. And I'm very confident that a 100-gram bar will get you a car even 50 years after. So it is a natural bet against inflation. The value of gold appreciates according to the inflation, sometimes higher also. And it's always to have a mix of assets, right? You can't rely on just one particular asset in your portfolio, and then if something goes wrong, your entire wealth goes away.
Let's just talk a little bit more about those assets, the digital assets rather, for investing in gold. Firstly, ETF. It's gained a lot of popularity. In fact, within the whole mutual fund basket, ETFs are very popular, particularly. Gold ETFs, let's talk a bit about that. Could you share a little bit about how gold ETFs work? And also there are some fears about, let's say, tracking errors and things like that. So is that fear justified, valid, or do you think it's a small smidge and the benefits far outweigh the...
So the way gold ETF works is actually very similar to how digital gold works, right? It is just that it is regulated and this is not regulated. So the way gold ETFs work is, there are physical gold which is deposited by APs in the vault with the AMC. The AMC gives them the units and those units are sold in the market. These units actually track the gold prices but not on one-to-one correlation, because there are different cash components for different AMCs. Like there will be, let's say, a Kotak AMC which will have a different cash component. What I mean by cash component is that entire money is not going in gold. There will be some portion which they'll be keeping in cash. But everybody has a different percentage of cash component. So the tracking error is not such a big deal. In fact, the benefits outweigh what the tracking error is. And even though the gold prices don't actually have a one-to-one correlation with the prices of gold ETFs, you will see some kind of correlation happening. The only disadvantage here is the prices for every ETF is different. So for the retail customers, for them to identify which ETF to buy, which not to buy, and what kind of exposure they are taking on gold, vis-a-vis where they are buying physical gold, where they know that I have bought a certain grams of gold and this is my exposure to gold. So it boils down to that only, like how a customer wants to invest in gold, what is their end goal. If they just want to be hedged against inflation and have some kind of exposure in place, but not having any direct or rather calculated way of what kind of investments they want in gold, gold ETF works for them. But if there is somebody who has an end goal, like I want some grams of gold, I want to reach these many grams of gold by this period, then physical gold or digital gold is the better investment.
Well, you mentioned a good point. Why is it that gold ETFs for different asset houses are different? If you could just elaborate on that.
Every ETF has started at a different point in time where the gold values were different. Also, they take decisions at different points in time on what the cash component should be. Okay. For example, let's say you have a 100 rupee NAV, right? You have invested only 95 and 5 is kept in cash. And there's another AMC who has 99 in gold and only 1 in cash. Some period has gone through. The price difference will be different. During that period, they might have changed it again. The tracking error would be different. So that's why there are different values for different AMCs.
Okay, sovereign gold bond schemes, again, a product, a very unique one. These bonds are issued by the Reserve Bank of India. So unfortunately, though, we've not been seeing any new bonds being issued, I think, in the last couple of months. So firstly, for the viewers who may not be familiar with SGB, if you could elaborate a bit on that, and also clubbing it with why the RBI has not been issuing any bonds.
Right. So sovereign gold bonds were an instrument where customers can again take exposure to gold, and these bonds would offer a return of around 2.25 to 2.5% on their holdings. These were bonds which were issued by the government of India, and customers could buy it when there are certain tranches which were put out in the market to be sold. There was also another feature where you had to be invested in sovereign gold bonds for a period of 8 years. So liquidity was kind of an issue, but customers or investors with a long-term view where they wanted to stay invested in gold for a longer period, this product was a wonderful product for them because it used to generate that delta of 2.25% or 2.5%. New tranches are not being issued by the government so far. From what we are hearing from the industry, they are not going to come out with a new tranche, but obviously it needs to be seen. In terms of liquidity, they had proposed that these bonds can be bought and sold on an exchange, and that is happening, but there is not enough liquidity that is available for customers to exit if they want to exit the sovereign gold bond investments. But that product really is a beautiful product. What it also helps us with is the import of gold gets cut down. The import of gold gets cut down because in terms of sale of new gold, customers would need that physical gold which is actually imported. Sovereign gold bond gives you an exposure against gold without the physical gold being imported. So that also used help the government in cutting down the current account deficit to that extent. And that's why this product was a win-win product for everyone. In fact, governments also is pushing for utilizing your own old gold in such a way that that gold can be recycled and then sold to the customers, just to ensure that whatever extent the import bill can come down for the gold.
Okay. Let's talk a bit more about that, because Indian households do have a lot of gold.
Yeah.
So far we've been talking about using gold as an investment, using gold as a consumable item like jewelry, etc. But gold can also be used to avail credit. That's
Yes.
gold loans.
Yes.
A very popular product, especially in regions of Kerala, Karnataka, etc. So could you talk to us a bit about gold loans and how it may possibly be the most easiest way to get cash?
So, loan against gold is a very large industry in India. In fact, people have been availing credit against mortgage or pledge of their gold ornaments since a long time. The benefit it provides the customers is they can use their gold investments, which in a way are lying idle in the world. Like when you buy gold or when you've bought an ornament, it is just staying there in the locker. Though it has an economic value to it, you're not actually utilizing that value. But if you pledge that ornament and take loans against it, you can use that money for any other opportunities. Maybe it is in the form of investments or doing your own business, or maybe for some need like a child education or some hospital emergency, etc. Instead of selling gold, you can take loan against it. There are clear guidelines which are set by the RBI on how loan can be availed against gold ornaments. These are done by regulated entities like the banks and NBFCs, and your gold is always stored in a secure place, which is a RBI regulated entity. So it is the best way of availing credit and using the economic value of your gold ornaments. The benefit it also provides is that you don't have to sell gold. So what happens is, let's say you have gold which is appreciating in value. If you were to sell it and take care of your financial needs, and then when your needs are taken care of and you have the money and when you go out in the market to buy gold, the value will be different. But if you have just pledged it, then the value is still there. You are still the owner of that gold. Your emergency needs or other requirements have been taken care of. Once you have the money, you unpledge it and you still have that gold with you.
So let's say I need I need money to invest in my own business or my child's future overseas education, or let's say to buy a house. Do you think that the cost for loans for these specific purposes, like a business loan or a education loan, etc., are more expensive than a gold loan?
So if you compare this with an unsecured loan where you go out and take loan for these needs, gold loan is a better option because it's a secured loan. The rate of interest for a gold loan is lower than an unsecured loan. Or I have seen some incidents in the past where there was this guy who was a fruit vendor. He used to wear a gold chain. He used to pledge that gold chain for a month, take money from the NBFC, use that money to do his food business or fruits business or vegetable business, and then at the end of the month, pay the money, unpledge the chain, go to his hometown, stay there for some time, then come back, do the same thing again. So beautiful way of utilizing your gold and getting the true value of what gold is actually for these customers.
Taking a loan against it is one way to utilize gold, but what other way can households utilize the gold lying idle in their home lockers or bank lockers and sort of try and maybe generate some revenue from it, or maybe convert it from physical to digital?
Yeah. So there's something called the gold monetization scheme which is available, where customers can actually deposit this gold with banks and earn an additional interest on it. The only challenge or the only drawback to this is you need to melt the gold and then you have to deposit it to the banks. The problem with melting is there is a lot of sentimental value attached to your gold ornaments. People don't want to melt it just for the sake of it. Like it will be an ancestral gold or there will be something which has been gifted to you from generations and you don't want to melt it. And that is why this scheme is not picking up. But where there is some gold that you own, where let's say old gold which you don't need, or a broken jewelry, or in the form of coins or bars, you can definitely melt that, put it to use, invest it with the bank, and the banks will give you a return on it, and you will still be the owner of that gold. So that is one way of utilizing it. Second is that gold can be used as a collateral for your other loans. Right? Like gold obviously is a liquid asset. You know what is the value of it. It can be for gold loans also, where you can pledge that gold and you get loans against it. Pledging of ornaments is allowed. Currently, RBI does not permit pledging of gold bars and coins. So loan against bars and coins are not available, but against ornaments it is there.
Okay. According to One Finance's research, gold tends to rise or stay stable when equity markets go down. So could you share this relationship between gold and equities or even other asset classes?
See, generally when there is a lot of uncertainty in the world, in terms of if there is a political uncertainty or a financial uncertainty, gold prices tend to increase because people increase the exposure in gold, because gold has traditionally been known as a preservation of value. So you will always preserve your value in gold, and it will not give you negative returns at times when things are working out to be very different around the world. Classic example is COVID or wars happening. In any war, after a particular war, there's always a recessionary period. Things don't really boil down very well for an economy. But you'll see that gold helps people in a way where they can preserve their value, right? Today also, there are a lot of things happening globally, and there are a lot of political uncertainties around the world in terms of policy making, what is going to happen in the future, how the economies are going to be shaped up. And when these things happen, you see that the equities tend to go down, right? Because the economic climate is not that favorable for a company to grow. The consuming powers of the company, the consuming powers of the customers is not increasing. The disposable income are not increasing. New GDP growth is not happening. At that time, all that money starts shifting to gold. So that's why there is a kind of a negative correlation where if the markets are down, gold tend to increase.
Okay. Of course, last year I think both increased, so that was an anomaly of sorts. Okay, Indian.
But also, what happens is when you say both of them increased, the stock markets in India increased.
Yes.
But globally they were not. And the gold prices actually globally were increasing.
True.
And also the rupee was also depreciating.
Yeah.
So all these factors combined together actually gave rise to this anomaly.
And I think gold rose more than equities, because gold returned around 25-ish percent, if I'm not mistaken, in 2024. Okay, now, of course, who benefited were the Indian households, because we own more than $2 trillion in gold, Indian households. I'm sure a big chunk of it is in physical asset form, maybe a small chunk in digital. Could you share with us some options for ensuring security of this gold in digital or in physical form?
So, first of all, these numbers are official numbers. The numbers can be higher. What we are referring to is the gold that has been imported post-91, which is around this value. But there has been a lot of gold even before that. The ancestral gold, the temple gold, the kingdom gold, everything is still there in India, not accounted for right now, but the wealth is still there in India. Also, in terms of old gold, when you talk about safety, security, and how you should be handling that gold, first of all, you have some good secured lockers in your home. Make sure that gold is kept properly in those lockers. Also, don't have this habit of flaunting it, that I have bought something new. There are certain things that has to be kept hidden. And like traditionally, I've seen my grandfather and grandmother saying that laya hai to keep it inside, don't show it to anyone, just keep it inside. So yes, but there are new ways now where you can also convert your old gold to digital gold. Like let's say you have some holdings where you don't want that gold to be used, as I mentioned earlier, like a broken jewelry, old jewelry, or a coin or a bar. You can convert that into digital gold, let it be on your app, let someone else take care of your storage, insurance, let them manage it, and you can be like at ease and not thinking about what to do and how you can do it. You can also keep your gold in the safe deposit lockers that are available with the banks. So that is also another option for safekeeping of your gold.
What, as a gold investor, what strategies would you recommend investors adopt to ensure that they are maximizing their returns and minimizing their risks?
There are 2-3 things that one should do. One is keep on buying at any price point so that you get the benefit of rupee cost averaging. Even if it is, have a disciplined approach. Keep on buying, let's say, a fixed time of a month, or if there are occasional buyings happening, let's say a birthday or an anniversary or any other festive season that is coming up, keep on accumulating small quantities of gold. Never shy away from buying gold when the prices are too high, or because nobody can time the market. You never know that today when you're talking about at price point of, let's say, 80,000 plus, it can even increase to another level and you will feel left out, oh, I should have bought at a certain point. Also, the other way of minimizing risk is identifying what kind of investment you want to do, whether it is physical gold, whether it is digital gold, and sticking to it. Take some time out to analyze what kind of requirement you have. Do you want that physical gold to be accumulated and to be used after 5 years, after 10 years? What is the time frame that you are looking at? Depending on that, select an investment product and then stick with it. Don't keep on juggling between investment products कि अभी ये कर लेते हैं. So I'll tell you, I have seen retail customers looking at ETF prices which are lower than your gold prices, thinking that यहाँ पे सस्ता मिल रहा है gold. But that is not the case. So evaluate your options properly. Once you stick with that, just keep on investing in a disciplined manner. It can be in the form of ornaments, it can be in the form of digital gold, it can be ETFs, mutual funds, whatever way. But ensure that you have gold exposure on your investment side.
Okay, let's talk about the tax implications now. If tomorrow I sell digital gold or physical gold for that matter, what is the taxation I'll be liable to pay?
So the capital gains for physical gold and digital gold is the same. See, digital gold is actually sale of physical gold which is done digitally. So it is not a new instrument or a derivative product on physical gold. It is physical gold. Just that it is stored on your behalf with the custodian and you can take the delivery whenever you want. Otherwise, it is still physical gold. The capital gain structure on gold is if you are holding for more than 24 months, it is considered to be a long-term capital gain. If you're holding it for less than 24 months, it is a short-term capital gain. Short-term capital gain is taxed at the applicable rates for every individual, and long-term capital gains currently are at 12.5% without indexation.
So if I have to be tax efficient, I should try, if I've purchased gold, I should try and hold it for at least more than 24 months and then consider.
Yes, and nobody really buys gold just to sell it off.
Yeah.
So most of them hold it for a longer tenure. Also, in India particularly, people don't generally sell gold to get money.
Yeah.
People sell gold so that they are buying it in some other form.
True.
Like if you look at jewelry, organized jewelry players, you will see that 40 to 45% of the gold sales, new jewelry sales, are happening against buyback of old jewelry. So people are actually using their old gold, giving it away and then taking a new jewelry against it. Gold holdings over a period of time keep on increasing with the Indians. So it's not happening that आज का gold holding ये है and 1 year later the gold holdings have come down. It has never happened.
So by the way, that brings me to another question. When people go and exchange their old gold and perhaps add on to it and make a new piece or something, is there a tax liability technically on the gold that you have exchanged?
The applicable tax is,
is there, okay.
Yeah. Because it is as good as buy and sell, the new buy and sell happening.
Yeah, okay. So you're absolutely right in saying that more often than not people go and they exchange their old jewelry perhaps for a newer design or to add on to the grammage of gold on the existing object. But then, of course, there's a tax element that comes in because I have to technically pay tax on the gold that I have given to the jeweler and then, pay the current value of whatever extra gold I'm adding. So is there any other way that I can amplify my gold holdings without having to pay the tax too?
In addition to the tax, there's also the element of losing the making charges that you're paying on the gold jewelry. Like if you're buying, let's say, 100 rupee worth of gold in the form of ornament, there'll always be that 10% that you're paying towards making charges, which actually gets lost when you're actually giving back your old jewelry. So a better way to do this is you keep on accumulating gold. When I talk gold, it is in the form of coins, bar or physical gold or a digital gold, but in the form of gold and not in the form of ornament. Plan your purchase in a certain way. At that time when you want to make an ornament, you can use this gold to make that ornament. Instead of just going out and buying an ornament and then thinking, "Arey, mujhe ye bhi pasand hai, I'll give this back and take that."
Understood. That makes sense. Yeah. Okay. Now, like I mentioned, $2 trillion in household assets and probably more, like you said, right? Because we've been accumulating since before the 90s too. And many times it happens that households sometimes don't have a correct estimation of how much gold is there in their, household wealth. So, how important is it to do that frequent audit, especially of traditional assets like these, and how can one get it done?
Yeah. So obviously, the new gold that you're purchasing, you have an understanding of what is the quality of that gold, what is the purity of gold, and what value it entails. Currently, also because of hallmarking becoming compulsory, you know what kind of jewelry you are buying and what is the purity of that jewelry. But the old gold that people have, that is stored in the lockers for years and years, maybe in the form of ancestral gold or gifts that they must have received from their forefathers, etc. There are many avenues available today where you can go and get the jewelry checked. Get a valuation done of your jewelry. There are certified valuers who can value that jewelry for you, create a sheet for you, what kind of gold holdings you have. And there's no requirement for frequent audits. Like once you know the purity of a certain jewelry, that remains the same. Okay. It doesn't change, right? So once you have got it done, you will know what value you have. One other reason why people go for using their old gold and buying new jewelry against it is also this, because sometimes they don't know what that old jewelry purity is. And they think that, I don't know which jeweler had made it, that jeweler might not be even available, not be alive also today. So they go to a store, ascertain that value, buy something which is hallmarked, and then they are rest assured like, okay, mera jewelry ka value ye to hai. But old jewelry, if there's a sentimental value to it, you don't want to give away that old jewelry, there are enough tools available today where you can ascertain the purity of that jewelry without melting it, keeping it in the same form, and there are valuers also who can get it done for you.
Okay, India, of course, does purchase gold. We import a big chunk of gold as well for investment purposes, for jewelry purposes. But what I want to know is that where is the money going more? Is it going towards digital assets or digital gold, or is it more physical?
Yeah. So India imports roughly about 650 to 700 tons per annum. This is the new gold that is coming in India year on year. In addition to that, there is also a recycle industry of about 500 to 600 tons where old gold is coming back in circulation and then new jewelry or new bars are converted or created out of them and sold to the customers. So overall, if you combine the two, we are talking about 1200 to 1300 tons. Of this, about 150 or 175 tons is investment demand. When I say investment demand, people are buying that much for purely from investment perspective, and the remaining is jewelry. Though we consider that jewelry again is a form of gold investment, but the industry looks at it as a consumption industry where this is being consumed for different purposes. Out of this investment demand, digital gold industry is very small. It is still largely catering to the physical needs of the customer where they are buying gold in physical form. But the trend is changing. If you look at year on year, the digital gold industry is growing by leaps and bounds. And we are talking about multiples, not percentage. Why this is happening? Because awareness is being created in the market where customers now understand what digital gold is. Customers are looking at different avenues where they can invest in gold. The best part about India as compared to other countries is, in India you don't really have to teach people about why gold, what is the price of gold. Everybody, you talk to anybody, they'll know gold kya hai, what is the value, what is the price, am I being overcharged for it, am I being undercharged for it. They understand everything. What we need to do for digital gold here is, you need to communicate or create awareness about this new method of buying gold. If that reaches the customer, we are done. And that is the beauty of India. Like, you don't have to teach them about gold, you have to teach them about the new method of buying gold.
And I think people like you are doing a fabulous job really of promoting that awareness. Yeah, I mean, so considering that and considering that it's a fact that awareness is growing about digital gold, and with increased digitization where the minute we wake up we're all on our phones, what is, or rather where do you see gold investments headed in the next decade?
So this is going to increase. In fact, a lot of awareness is being created with the millennials now that who are actually looking to invest their money. They're looking at new age products. gold obviously is on their radar, and the kind of returns that gold has given, particularly in the last year and also on a CAGR basis over a period of 10 years, everybody knows the value that gold has and the returns that it can create for them. I feel that in the next decade you will see more investments coming on the investment side. The consumption side, I feel, will slightly go down because people don't really want to buy ornaments at rather the newer generation don't want to buy ornaments the way the older generation used to buy, but they want to have exposure on gold. So the investment demand is going to go up and the consumption demand is going to come down. People will tend to buy more digitally. In fact, in our case, we see so many customers buying gold at midnight and after midnight. Like, interestingly, we never thought that someone would buy gold at 2 a.m. in the night, suddenly thinking, I'm not getting sleep, oh, I should buy gold. So I see that the next decade is for digital ways of buying gold. People will look at digital ways of buying gold, the convenience that it offers. Also, the tier 2, tier 3 towns, the aspirations that they have to come on the digital side of the economy, and the trend that is there for all industries where you see digitally there's a growth for them, the same thing will be seen for gold as well.
How do you think the temperament of younger investors has changed towards gold? Because one thing is very clear, that when it comes to our forefathers and ancestors, they loved gold. Probably also because it was the only investment option available to them, that you have a little extra cash, you park it in gold. Today, there are more options also available. So how do you think that temperament towards gold has changed?
So earlier you didn't have such multiple avenues for buying gold. There were only a few places, like mostly your jeweler, where you can go and buy gold. So the trend was always towards buying a larger piece of jewelry, investing whatever money you had in gold, and it was primarily in the form of jewelry. But nowadays, because there are so many other avenues available, you have ETFs, you have the digital gold, you have mutual funds where you can take exposure on gold. The customers have started moving towards buying smaller pieces of jewelry, like an everyday wear, and also because from the lifestyle side, people don't generally wear those chunky pieces of jewelry nowadays. So it is only at the weddings or some occasion that they have that heavy jewelry. Otherwise, lighter jewelry has been trending, and that's why the customers or the new age customers, they prefer taking exposure on gold on these multiple products and not so much on the physical jewelry side.
All right, Sachin, this was, I think, truly an enlightening conversation for people who want to invest in gold, who are already investors in gold, actually. That's a majority of our population, on what the true value of gold is, and of course, the newer methods as well of investing in gold. Okay, well, there you have it. That was everything to do with gold, how to invest in it, and what is the potential of this asset class. Of course, all of us do own gold in some way or the other in our households, but it's important, firstly, to ensure that you assess the true economic value of that gold, of what we own as a household, get it assessed, get it audited at least once, and ensure you're putting it to good monetary use. The second key takeaway is that gone are the days when physical gold was the only way to purchase gold or get exposure to it. There is digital gold now, where physical gold is stored on your behalf in safety vaults, and you can gain access to that anytime. If you're an investor, though, in gold, there are multiple options to invest. Firstly, ETFs, which also makes it economical because you have the option of an SIP in gold ETFs. There are EMIs with gold jewelers too, but be careful of the kind of jeweler you're opting for. Don't forget to consult a qualified financial advisor before making any investment decisions. That brings us to the end of this episode of Temperament. Hope you enjoyed watching it. If you did, don't forget to hit the like and subscribe button. That's all for us. Thank you so much for watching.